Now that tax season is over, I want to break down a common misconception when it comes to how much you pay in income tax every year. When people are talking about how much they owe in taxes, you may hear someone complain about how they got bumped into a higher tax bracket and therefore owe so much more this year. Although it's technically true that they may owe more in taxes, this doesn't mean that their entire salary is being taxed at this higher rate in the new bracket. Let's break this down using someone who made $100,600 in 2024 as a single filer. First, let's assume this person uses the standard deduction, which was $14,600 for 2024. Let's also assume there were no other deductions and they didn't make any retirement contributions. So after the standard deduction, their taxable income for 2024 would have been $86,000. Now, at first glance, this filer might have said that they were in the 24% tax bracket since they were making $100,600, which is just above that threshold. Let's find out what they actually paid in taxes. So their first $11,600 is going to be taxed at 10%. Then their next $35,550 will be taxed at 12%. The remaining $38,850 of their taxable income will be taxed at 22%. This adds up to $13,973 in federal income tax owed. So because this person was making $100,600 in their salary every year, they may have said that they were in the 24% tax bracket, when in reality, none of their income was being taxed at that rate. Now we know that they owed $13,973 in taxes and had a taxable income of $86,000, making their effective tax rate 16%. Taking it one step further, if we look at the taxes paid as a percentage of their gross income, we get 14%, which is much lower than 24%. This is why getting a raise doesn't mean all your income is taxed at a higher rate. It may just nudge a small portion into that next bracket.